Yeah, very good afternoon on this Monday, Business Live with me, Darren McCaffrey. Well, we're going to begin with the Chancellor, Rachel Reeves, who's returned from China to the full confidence of the entire Labour Party. That's according to the Prime Minister this morning. But when asked if she would remain in her post for the duration of this Parliament, Sir Keir Starmer refused to guarantee anything. Maybe it's not a surprise, given that the markets remain jittery, with the pound falling again as government borrowing remains high. Let's speak to Raoul Ruparel, who is a Senior Director at the Centre for Growth, part of the Boston Consulting Group, and, of course, a former Special Advisor to Theresa May. Very good afternoon to you. I suppose the big question is, how concerned should we be when we look at the pound falling, we look at the cost of borrowing for the UK rising even again today?
Well, look, I think we should be concerned. I think if you look at the drivers, this is part of a global sell-off driven by particularly repricing of the outlook for the US economy in terms of growth, inflation and interest rates. But there are still reasons to be concerned for the UK, particularly in terms of the effect this has on the fiscal headroom that the government have and the need for potential additional tax or spending cuts to address that. But I think also because the impact it has on corporate borrowing costs and mortgage borrowing costs, it will increase interest rates across the economy. And when we look at what needs to be done in this country, particularly in terms of investment and growth, the cost to investing and the cost of borrowing will be pushed up because of these higher borrowing costs, because they set a floor for the rest of the market. And so that, I think, for me, is a particular reason to be concerned. But we shouldn't overreact. I think, as you note, the pound has got weaker against the dollar, but I think this is particularly a story more about dollar strength than pound weakness to a large extent. The euro has also got weaker against the dollar by a similar amount to the pound. So we should be concerned, but we should also not overreact and take a view on what some of the underlying drivers of these factors are.
And you get that sense, don't you, and you've alluded to there, that this is much a story about the United States, is it about the UK? I mean, we saw, pretty good job numbers again last Friday, and a sign just of how robust the US economy is at the moment.
Yeah, very much so. Look, the US economy is, currently, I guess, by most estimates, performing at or above capacity. You continue to have high levels of government spending. You obviously have a potential deregulatory push coming under the new president and the next government. And so we are seeing a repricing of that, and markets are digesting all of that and figuring out where exactly the outlook will land. There are, though, UK-specific factors which I think are exacerbating the UK challenge. We start from a higher position in terms of our borrowing costs and our debt levels than many other countries, and I think as yields rise, that starts to concern investors that we're having to spend more and more money on debt interest, and we're coming from a higher base. I think you also have the fact that you have limited fiscal headroom and still quite stubbornly not high inflation, but above target inflation and particularly high wage growth. And so I think there are some UK factors on top of this that are exacerbating, but we have to be realistic that there has been a repricing across a number of countries and across the markets more broadly that has started this.
Just on that, just to pick up on what you were saying there about there is an acuteness, if you like, to what's happening here in the UK. And I say that because when you look at the wider macroeconomic picture, it's not great, isn't it? We have got potentially inflation going to rise this year. Interest rates remain stubbornly high, but more importantly, just no sign of any substantial growth.
Yeah, look, I think, coming into this year, I think people were a bit optimistic or were hoping to be optimistic. When you look at our projected growth forecasts from the likes of the IMF and others, the UK is expected to grow more strongly than most of Europe, if not all of Europe, and not quite at levels of the US and North America, but better than many peers. That being said, when we look at what happened in the second half of 2024, we had a really strong first half. In the second half, we saw pretty anemic growth and very little growth. So, and we know that business and consumer confidence has ticked down again. So, yeah, look, it is concerning from that perspective. I think what businesses really want to see is a bit more thought about how we are going to turn this around and what the path forward is. We talk a lot about growth at the moment, and the government talks a lot about growth, but we need to start seeing some action in that space. I think today's AI Opportunities Plan is a good start and will be encouraging. I think they want to see more in terms of fundamentally, how are the returns to investment going to be addressed in this country? I think when you speak to businesses, why are they not investing?
Yeah.
Ultimately, with borrowing costs very high, but also with input costs, energy costs, wage costs, broader labour costs being high in this country, returns have to be really high to investment, and we're just not seeing that at the moment. So I think they want to see action to address some of these fundamental challenges that mean
Yeah.
they're not willing to invest.
And Royal, just on the politics, you've been at the heart of government, haven't you? Not the big scrap at the bottom of the screen that our viewers can see is Starmer, full confidence in Chancellor. Many people say when a Prime Minister has to suggest they've got full confidence, it's the beginning of the end. We're not anywhere near there with Rachel Reeves. Of course we're not. But it is kind of quite incredible that, about 6 months in to her being in number 11, that people are even starting to talk about this.
Yeah, look, it shows the speed at which things move in politics today. And, as you said, I've been at the heart of it, I've experienced it. Things do move quickly, but look, we're not anywhere near that, as you say. She's had one budget. I think people will be looking towards what we've got coming up in terms of the industrial strategy. We've got a number of 10-year plans for the NHS, for infrastructure, and then we've got the spending review. And I think what people want to see is a clearer picture for the economic strategy of the country and where we're heading and what the positive outlook is. I think the budget was there to repair the balance sheet. I think people understood that, but they want to see a bit more of what this upside is and what the path forward looks like and what we're really working towards. And there are opportunities in the coming months with the things I mentioned to do that. So I'm hopeful that Rachel Reeves and the government can still deliver that.
OK, Royal there from the Boston Consulting Group. Thank you very much indeed for joining us this afternoon. Appreciate it. Thank you. Now, there was more bad news for the Chancellor today with a gloomy report from some of the UK's senior business executives. It's a survey of the chief financial officers by the consultancy firm Deloitte found that a majority were pessimistic about the businesses. It also found that large British companies plan to cut hiring this year at the fastest pace since the pandemic and scale back investment because of the tax rises that were announced in the budget. Let's speak to Ian Stewart. He's chief economist at Deloitte, who, of course, carried out that report. A very good afternoon to you, Ian. And this has all got to do, or largely got to do, I should say, with those substantial changes in the budget, particularly around tax.
Well, it was certainly one of the factors. I think it's also the case, as Raoul, your previous speaker, said, that we're in a world in which borrowing costs, market interest rates have risen, and they've been rising since September. So businesses are looking at higher bond yields, which could feed through to market rates. And there's also been quite a marked slowdown in the pace of activity into the second half of the year. So I think that kind of constellation of factors, coupled, of course, at the end of this month with a new US administration and the possibility of possibly quite high tariffs, which could raise inflation. So I think all of those things have weighed on confidence in this latest survey. I would just say, actually, as a caveat, I mean, we've been running this survey for 16 years. The decline in confidence is an awful lot less than we saw, for instance, in 2022, when inflation rose on the back of higher oil prices, or indeed in 2020. So this certainly isn't a collapse in confidence, but it's definitely an adjustment downwards.
Just let's look at the cause of this. I know you say that it was one factor. What is your sense of what's at play here? You listen to politicians, Conservative politicians, they say Labour talked on the economy, they say the budget is not held. But are there wider, more structural, more long-term issues at play here, rather than, a government that's been in place for 6 months and one budget?
Yes, I think it's a very good point, and I think there's a bit of a danger we kind of overanalyze recent changes. I mean, I think the fundamental challenge for the UK economy, and it's really no different from that of other major European economies, is that we have seen a very significant decline in the long-term trend rate of growth of the UK in the last 20 years, and actually particularly since the financial crisis. So, if we'd been here around the turn of the century, we'd have thought UK trend growth was maybe 2.5%, possibly slightly higher. Now, you might believe it's around about 1.5%, an awful lot lower. And I think that goes to the heart of the challenge the government has, which is how do you improve public services when you have very high levels of debt, high interest rates, and a slow rate of growth, which is, of course, why the government is emphasising the importance of raising the UK's growth rate.
And Ian, you talk there that things are bad, but they're not quite as bad as we've seen in recent years in terms of this survey and business optimism. Can we be optimistic for a second? You know, where can we find hope in 2025 when it comes to business growth, to the wider UK economy?
Yeah, we shouldn't overdo the gloom, actually. I wouldn't wish to. I mean, what we found with this survey is that in recent years, CFOs' perceptions of external uncertainty, and that might be to do with geopolitics or financial uncertainty or political uncertainty, those have run extremely high. And I think the positive side of this survey is that although perceptions of uncertainty have risen a bit in this latest survey, they're nowhere near the levels that we've seen for most of the last 5 years. And I think that therefore suggests probably what we're seeing here is a kind of moderation in optimism, but not a fundamental change in the view about what I think most economists expect is a continued, if erratic, UK recovery. CFOs expect wage pressures to ease, and they do expect interest rates to decline over the next 12 months. The government is spending in really quite a big way, which partly explains what's been going on in the bond market. That will provide a lot of stimulus for the economy this year. And the other factor is the US economy is doing very, very well. It's an important economy. Obviously, it's the world's most important economy. And I think that's another kind of tailwind. So I think we're still looking at an economy where this year the UK will probably grow by around about 1%, not shooting out the lights, but better than last year, better than most of our major European competitors.
Okay. Yeah, I mean, it certainly seems to be a lot worse, or certainly worse, in places like Germany and France, which are also facing political instability or uncertainty in the year ahead, at least. Ian, for the time being, from Deloitte, thank you very much indeed for your time. Now, Sir Keir Starmer was actually making an announcement today about the government and AI, arguing that Labour will mainline artificial intelligence into the veins of the UK as he announced tech reforms, which could add £47 billion to the economy every year. I speak to Spencer Lamb. He's Chief Commercial Officer at KO Data, which helps develop AI data centres, and recently broke ground on a £350 million development in Manchester. Very good afternoon to you, Spencer. Just give us a sense from your understanding of what the Prime Minister was announcing today.
What I'm pleased to have heard from the Prime Minister and also from the Matt Clifford's report is an understanding of the opportunity that AI provides for the UK, and also a deep understanding of what's required to actually deliver on that promise. Previous governments, we've struggled to make it clear that the infrastructure is needed to be the foundation of the compute that resides within these buildings. And it does seem to us today that that understanding is clear. And from the ground up, the plan seems very simple and straightforward into achieving the ultimate goal, which is providing the AI resources for enterprises and also research institutions to access and do what they need to do.
Now, you're investing a lot of money in Stockport. Where do you think the UK is? And it certainly doesn't feel like a world leader, does it, when it comes to artificial intelligence? That, at the moment, seems very much in the hands of the United States and China to a degree. Where are we, do you feel, or are you frustrated with where we're at when it comes to AI?
Frustrated and have been for many years, but I do see light at the end of the tunnel with the acknowledgement of what's needed for us to achieve, or the UK to achieve its AI ambitions. Yes, we are behind the curve when it comes to the investments that we've witnessed in America and in China, but we do have the opportunity with the fantastic education system and in turn the universities and the research institutions that reside in this country and the people that go through those processes to access the platforms that we can create over the coming years to allow us to get nearer the USA and nearer China with our AI ambitions and goals.
And just very finally, Spencer, you know, if there always has to be niches, don't there? We're not going to be able to take on some of the big countries. They've got massive R&D budgets. and who have had a head start. Where do you think the UK's niche, if it is to get ahead in this game, because AI is massive, isn't it? Where do you think that should be?
We've got a history of decades of fantastic genomic research, medical research, cancer cure developments, and demonstrating that capability, building on the regions around Cambridge and all the organisations and AI startups that have been born from that capability, I think is really where we should focus our ambition. But beyond that as well, to automotive skills, I think that there is that groundswell within the country that can provide that, as long as we provide them with the resources to achieve it. Otherwise, I think there's a danger that those people will go elsewhere and, as you say, go to the likes of the USA and China to realise their ambition. OK,
Spencer, appreciate your time this afternoon. Good luck with the investment up there in Stockport. Spencer Lambert, thank you very much indeed.
Thank you.
OK, we're just going to pause away from business news for a second, because you may have seen earlier in the hour we were watching a press conference from California, from the authorities there, given the wildfires. The fire chief telling residents they are not in the clear when it comes to these wildfires. Well, my colleague Jane Secker, who's been presenting over the last couple of days from Los Angeles, managed to ask the question of those authorities at that press conference. Let's have a listen in to what she had to say.
Hello, Jane Secker, Sky News. A couple of questions. One to Fire Chief Moroney. More bad winds on the way. We know the conditions, as we've just heard, are going to be the same as last week. How confident are you that you're better prepared this time? And also a question for Mayor Bass, if I might. Our correspondent David Blevins asked you last week if you owe the people of Los Angeles an apology for cutting the fire budget. You didn't respond to him then. Would you like to respond to us now?
So for the fire question, thank you. We're absolutely better prepared for this coming PDS, the severe fire weather event. You've heard the statistics, number of personnel assigned to the incidents, over 5,000 firefighters assigned to the Palisades fire, over 3,000 firefighters assigned to the Eaton fire. The state, under the leadership of Governor Newsom, has set up a mobilization center in Banning, where we have resources staged that can come into LA County to assist with a new fire start or the expansion of one of our existing fires. We also have numerous aircraft, local government aircraft, helicopters, we have water bombers, we have retardant fixed-wing aircraft from the state and federal government, we have military aircraft. So we've not only augmented the ground resources, but also the air resources. I think that we're very well prepared for the next event, but that's never going to be, we're never sure that we're going to be able to catch the next fire and keep it small. They said 70-mile-an-hour winds. It's going to be very difficult to contain that fire. That's why we ask all residents in a brush-prone area to be prepared to evacuate if you get the evacuation order, and start those preparations before the evacuation warning comes. Thank you.
There was a two-part question to that, correct?
My focus is on us being prepared as a city for tomorrow. As you began, we could face another very difficult situation for thousands of Angelenos. When we are past this period, there will be an evaluation of everything that went on. And at that point in time, we will see there is not agreement as to whether or not the budget was cut. All of those issues will be resolved when we are clear that Angelenos are safe and we are ready to rebuild our city. Thank you.
Thank you. We're going to go right here in the middle. Next.
Jonathan Bigliotti, CBS News, for Mayor Bass.
OK, there you go. That was the authorities in Los Angeles responding to Jane Secker's question. We heard there from the mayor defending effectively some of the questioning that have been put to her in recent days about cuts to the fire service in Los Angeles, saying that she is focused on preparing for tomorrow, but there will be an evaluation of what has taken place in the lead up to the fires after they deal with the current emergency. OK, you're watching Business Live here on Sky News. Going to take a quick break. Coming up next, we're going to be talking about the markets. It's been a difficult day all round, the FTSE down. The details after this quick break.
There's always more to the news than a headline. We want to discover, to delve a little deeper, to find out what's really going on. Explanation, analysis, the people at the heart of every story. I'm Neil Patterson, and this is the Sky News Daily Podcast. So, by the end, we'll hopefully all understand what's going on in the world just that little better. Available wherever you get your podcasts.
Very welcome back. Let's have a quick look at the markets now with Anna McDonald, Investment Manager at Aubrey Capital Management. Anna, very good afternoon to you. Can we just start with oil, if that's right? Because it's now above $80 a barrel. I think it's gone up by maybe $10 in the last month or so. What's driving that, do you know?
Well, from having moved to thinking that we might have some excess supply going into 2025, Biden has now put new sanctions, much stricter sanctions, on two big Russian firms that make up about 30% of Russian oil exports. And that's been quite a surprise for the market. And apparently, currently, you now have 3 tankers off the coast of eastern China with 2 million barrels of Russian crude sitting on board, because the China and India and other countries which have allowed imports of Russian oil and gas are now struggling to work out what those new sanctions mean. So that, and in addition, Trump's rhetoric against Iran, which might lead to further tightening in the oil markets. That's
Okay.
pushed the price up.
And Anna, we've got 30 seconds, I'm afraid. Can you talk to me about the bond markets? Do you think things are going to quieten down this week?
It all depends on Wednesday's inflation data we're getting from the US and the UK. If those numbers surprise on the upside, I would expect more weakness in the bond market, but that means that yields go higher.
OK, Anna, I'm sorry we're short and sweet today because of that press conference from Los Angeles, but we will have you on again soon. Great analysis, as always. Anna McDonald there from Albury Capital Management. OK, that is it from me on Business Live for this afternoon. Busy programme, as always. We're back tomorrow morning at 11:30. Do join me then if you can. Coming up next, it is Matt Bobette with the News Hour. I'll see you tomorrow. Goodbye.